you look at this Bitcoin chart, I realize right off the bat, Bitcoin since last night has pumped around 3.5%. I know many of you are saying and probably already commenting just by the title, that's not a pump, Dan. What are you talking about? But on the short term, this is a pump. This is a pump to, most importantly, such a critical macro area, everybody. This is live stream attempt number 2. If you're in the chats, please let me know that you can hear me. Just want to make sure. And I'm just going to just kind of go through and dive into this video because there's so much going on in this chart. It seems like nothing to a lot of people that might just be glancing and seeing Bitcoin up around 3 to 4%. But this $17,000 area, this yellow line that you see on the screen, this is it, everybody. This is huge. So I want to dive in. This is a 6-hour chart, and we're going to actually dive in also to the short term, and we're going to discuss what is going on even in the short term on the 6-hour. There's an inverse head and shoulders potentially in play, breakout targets to slightly above $18,000. I want to talk about why that is meaningful, why right now I'm being extremely careful with this chart, and I'm going to break it all down real quick. This is off the back of kind of the main headline right now, S&P 500 gains for the first day in 4 after Powell signals smaller rate hikes ahead. Hit that like button if you're in this chat that has actual working audio. I appreciate you. Federal Reserve Chair Jerome Powell confirmed that the central bank will slow the pace of its aggressive rate hiking campaign that has weighed on markets. So this is kind of what's moving Bitcoin and crypto in the short term. If we go to that short-term chart, you can just kind of see this is a short-term move, and it's on the back of headlines. We always talk about this. Technical analysis, in my view, it works. And we have these events in the short, mid, and even long term that kind of trigger Bitcoin and crypto to move to really key areas, to test things, to give us confirmations. This is why I do technical analysis. So if we're looking at the headlines, here's the move that caused Bitcoin to go to the $17,000 range. And again, such a crucial move. It makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. That's what Powell's saying. The time for moderating the pace of rate increases may come as soon as the December meeting. So this is kind of infusing some optimism into the markets as soon as December, which is literally December just getting ready to start. And the optimism kind of comes from this. He's kind of alluding to the fact that the Fed will deliver a smaller 0.5 percentage point rate hike at its next meeting after 4 consecutive 0.75 percentage point increases. So a little bit of optimism here. And, you know, the market really reacts to that, S&P reacting to that. And we got to continue watching those charts. But for Bitcoin, this is what it means, everybody. And this is where I want to really dig into the charts, dig into price, talk about what's going on, because it's not just Bitcoin either. This Bitcoin chart that we're looking at, it's a roadmap for me. It's altcoins in my crypto journey at this stage, and I'm years and years in now, altcoins more important for me. And the roadmap for me, though, is Bitcoin, and it's this Bitcoin chart. And namely, this yellow line that you see here, many people out there that watch my technical analysis might be sick of hearing about it, but that Fibonacci line is key in these macro cycles. And right now, Bitcoin intertwining, testing that line. The line is just a retracement. It's a pullback area that Bitcoin has seen in these cycles throughout these bear markets and bull markets. So the last bear market to bull market high, we have this Bitcoin retracement. That's all it is. It's Bitcoin hitting a swing high and retracing back down to this key area, this yellow line. It's a 786 line, 78.6%. To put it very simply, there's repetition in this move in the crypto markets. For me, we've been tracking that line for years. We've been tracking the fundamentals behind what this means for cycles for years. And for the most, or to put it most simply, this line signals for me. And this is how I see things, everybody. Signals for me, we've entered bottom range. And there are targets to the downside. I'm not saying the bottom is in, but we're entering bottom range. And there could be weeks or months left of the bear market. But weeks and months will go by very quickly. And that's why constantly, ever since we've broken finally below the 786 line, the yellow line, I've been just very urgently planning and figuring out my approach to these markets because I think the bottom is getting close. Now, here's the move. What's so important about it, and it is such a key macro move off of this short-term pump. I know people are going to get triggered that I use the word pump, but if we go back and we look at previous cycles, Bitcoin falling below the 786 line, it's not just important to note that, hey, Bitcoin fell below the 786 line. It's in its bottom range. It typically traded sideways, and then it exited after months. It exited the bear market after months. That's not the only thing that we have. We have the story that plays out when it is in the bottom range. So here's 2015. This is a 2015 move below the 786. And you notice Bitcoin actually came back up and it tested the 786 line. This is a weekly chart. It tested the 786 line. Now, this is pretty much exactly what is happening right now. It didn't take as long for Bitcoin to do this, but Bitcoin's getting pulled back up into the 786 line. This is a huge macro indicator. Now that the resistance, or I'm sorry, the pullback area of the 786 has been broken and Bitcoin has fallen below it, meaning there was no support, there was no bounce, Bitcoin fell below it into bottom range. Now the line is no longer really this retracement line of potential support. Right now on the macro, it's a resistance line. This is a macro indicator. So this will really help us pivot throughout this bear market. And Bitcoin could kind of intertwine with it, kind of up above it. It might see just exact resistance falling back below and then testing again. We have to see how Bitcoin interacts with that line. But here's 2015, Bitcoin interacting with that line a couple times. You notice right here, towards the end of the bear market in 2015, the weekly kind of popped above it, hit the 50-week moving averages, and that's why it's so important to bring into play other tools that we have in the toolbox, other indicators. In this case, it's not just the fact that Bitcoin broke above the 786 line in 2015. We had to take note of, hey, 50-week moving average drawing near. Is there going to be resistance there? So there was resistance, and Bitcoin very quickly fell back below in the week after, the 786, and didn't get the actual bullish confirmation and separation above the moving averages, all these lines here, the 50, the 20, the 200, and confirmation above the 786. And it took 301 days sideways trading for Bitcoin to do that. So that's 2015. And here's 2018. And if you were here, I know there's some people out there, hit that like button if you were here in 2018. And if you're newly into this stream, hit that like button as we continue breaking down these Bitcoin charts. This is Bitcoin falling below the 786 line in 2018, a little bit different than the 2015 chart, but guess what? Some similarities, meaning Bitcoin falls below the 786 and gets a pullback to test the 786 weeks later. I mean, around a month later or so, it sees resistance there, and then there was months of sideways, more downside, and this was 133 days, the bottoming out phase for Bitcoin. So now here we are, and it's just so telling to me and so fun. I mean, I'm not saying the bear market is fun, but everybody, this is almost like 5 years just tracking these crypto charts almost every day. And the reason I continue doing it is because it continually works and it helps me. This is a roadmap, but to see these indicators play out, indicators that we waited years for. I mean, this 786 line, I was doing videos back in 2018 at the bear market low. If we look at this chart, I was doing video all the way back here speculating, where's the next 786 retracement going to be in the next bear market? And I charted it here on this Bitcoin chart, and you can see the lines coming from just Bitcoin entering into a bull market and getting pulled back down. Wasn't exact, but it played out almost exactly. And so it's exciting for me to break down these charts and to kind of see where Bitcoin has come, how far it's come, and the consistency that lies within these charts. And the reason that I use that word a lot, consistency, is just the fact that with all the mess going on right now, and there's a ton of FUD, and there's just people we just did a video on this yesterday. So many people calling for crypto, the end of crypto, crypto's dead, all of that happening, right? All of the mess with not knowing what the Fed is going to do. When is CPI data and inflation going to just fall and come back down? When are things going to be normal again? All the fear. Bitcoin and the charts that we see here have remained so consistent. And that is just such a big deal to me as a macro investor. So that's why we track these things. So yeah, Bitcoin has fallen below the 786 line. This was just a few weeks ago, and we already established it was 300 plus days in 301 days below the 786 line in 2015, 133 days in 2018 bear market. And now here we are This is fresh. This is like a month. We've only been here a month below the 786 line. So when we're getting a test so early on and with still potentially more downside, that would be commonplace for Bitcoin in a bear market. We've established in recent videos, 35% below the 786 line to around $11,000, $12,000 is commonplace. It would not be out of the ordinary. It would be actually normal. If Bitcoin didn't do it, it would be weird. It would be like Bitcoin's not doing what historically it has done. And we have such a cushion now, even with the state of affairs throughout the entire world and the economy and everything, we have a cushion. So if things do get a little bit worse, if there's another leg down for traditional markets, S&P falling another 20%, there's room to the downside for Bitcoin. So as we start formulating this story together and putting this story together, it helps us anticipate some things, especially as we start looking at short-term charts. So here we are on the 6-hour chart. I know so many of you love the short-term charts, and probably I know that because I like the short-term charts too. I'm always opening up the short-term charts. Even though I'm more of a macro-minded investor, I'm not so much a trader at all. I like the 6-hour charts, especially when we start getting moves like this, where a 6-hour chart is colliding with this macro chart. And there's the Fibonacci, the 786 line that I essentially have waited years for. And if you've been tracking along, you've been waiting years for it as well. So we've fallen below it. We've kind of tested it quickly, and now we're testing it again. And this is the true short-term resistance. And you can even see on the 6-hour chart, just Bitcoin seeing immediate resistance on the 6-hour chart at the 786. But let's put aside the 786 resistance for a second, and let's say, all right, if let's say Bitcoin can manage to break above this macro line, the 786. So it could be kind of a potential move like back here in 2015, where Bitcoin in the bear market broke above that macro line, the 786 line. Let's bring this into the equation if this happens, because now that we have a 6-hour chart that looks like this, it's possible. So this inverse head and shoulders on the 6-hour chart gives us a target to just above 18,000, so like 18,300 or so. Now, the reason why that's important, and this is something we can really track in the short term, meaning today, we can track it going into tonight, potentially tomorrow and the next day, because this is a 6-hour chart, but it's not like Bitcoin just hits a 6-hour candle right to the target. Bitcoin, if it were to break the 786 resistance, it could potentially just kind of come up, and then we're talking on the short term, will there be support at the 786? Or we're getting this kind of like throwback, and then we're kind of heading up towards our target above 18,000. But let's assume whether it just goes right to the $18,000 target, or if it's kind of trickles, comes back down, and then hits it. Let's assume Bitcoin were to hit it. This right here is why I'm being very careful on these crypto charts and in this crypto market, is because if you go over here to Bitcoin on the daily chart, and we haven't looked at the daily, but here's what it looks like. Bitcoin on the daily chart right now, here's a 786 line. Here's a resistance that we just looked at on the 6-hour. We have a 50-day moving average, which in bear markets is a key area of resistance to track, right? Bitcoin can fall below it and kind of get pulled into it often on the way down. So if that were to set up like that, I want you to notice where it is right now. The 50-day moving average is right around where the target is for Bitcoin out of this inverse head and shoulders. It's right around $18,400. Now, on top of the 50-day moving average, which we can just put a big R there for resistance. On top of the 50-day moving average resistance, if Bitcoin were to hit that target up there, we have this. If we zoom out on the daily chart a little bit, can't forget about this, everybody. The descending triangle, that was terribly drawn, but the descending triangle that we were tracking on Bitcoin, that we had the fake breakout, remember? We waited for the kind of throwback to the trend line, see if there was support. It didn't happen, and we get the break to the downside. So we have a busted descending triangle in play, meaning we get the fake breakout, and the breakout actually goes the opposite direction. But guess what? Since this happened, the breakout to the downside, we be anticipating, once again, as you all know if you watch my videos, we anticipate a pullback to the trend lines. And just notice, and look how beautiful this chart is, just notice where the pullback area is. The pullback area is that confluent area where the 50-day moving average is, and it's also right where the target is of this inverse head and shoulder for Bitcoin, right around just above $18,000. So the chart's coming together ridiculously nicely, and we're all here, and it's so interesting when the micro, meaning the zoomed in chart, collides with this macro chart. And this macro chart for me is everything. This 786 line for me is everything in terms of my plan. Bitcoin fell below. We're in this range. Somebody the other day asked me, what are these colors in this box? And for me, it's just, I'm a very simple person when it comes to planning. I just need simple visualization. I think this is why I like technical analysis so much. But it's like, all right, it's one thing we fall below the 786 line, which is what happened in 2015 bottom. It's what happened in the 2018 bottom. All right, it's happening again, but what does that mean? You know, what does that mean in terms of my approach to crypto? Remember, this isn't my approach to accumulating Bitcoin per se. This is when Bitcoin falls into these ranges, it's important for my altcoin portfolio. So I charted this box, and it's so simplistic. I charted the box because it's like, all right, we know the downside is in play from $11,000 to $12,000 if Bitcoin were to do exactly pretty much what it's done in previous bear markets. That's the move. It's not necessarily going to happen, but that's the move. It's what's in play. So if I'm anticipating the potential that's there, how do I attack this entire area? And for me, it's very simple. It's just like split it up, right? Get into this first zone, have my plan, get into the second zone. If it gets there, I have my plan, and get into this third zone. And for me, this third zone mimics the type of move and capitulation and bottoming out that we had in 2018. That's that type of opportunity. That is what this last box mimics and reflects for me. And so I have my approach to that. And it's kind of just a leveling in approach in terms of the entire range. And it's a 35% range for Bitcoin. Many people, and I kind of agree, it's just like, does it really matter now versus like $17,000 or $13,000? It's like, maybe it doesn't matter as much, but in terms of just being able to not kind of FOMO in and be like, I need to time the bottom. This just allows me to have a plan at each level so that I know what I'm doing, right? Because if you go into these things without an exact plan or an idea, at least for me, that's kind of when I get messed up, right? And I kind of get a little bit emotional about it. So I'm not sure if that makes sense, but hopefully it does. If it does, good. So that's it. That's it pretty much, everybody. So we've, at the end of the day, we've broken below the 786. We're getting the pullback. Note, if you weren't here earlier in the stream, this is what happened in 2018. We broke below the 786 Fibonacci, got the pullback. There was resistance. So in the short term, let's think of potential resistance. Same thing happened in 2015. Fell below the 786, pulled back to the 786, resistance not once, but twice. And here we are once again. I'm anticipating resistance. And if in the short term, it breaks resistance, I'm anticipating resistance up here in the $18,000 area. And that is because we have two areas, the 50-day moving average right there at that target, and this lower trend line from the descending triangle that we had and that we've been tracking really for months. So the pullback would not surprise me, but either would resistance at that area if it were to happen and we fall back into to dip into this bear market bottom range. Because as many of you know, I think we're almost out of the woods. I think 2022 is going to be the worst of it, everybody. That doesn't mean there's not another leg down for me. I'm anticipating another leg down. But I'm very optimistic and hopeful that 2022 is the worst of it. And remember, this is based off of, years of data. We were looking at over the last 69 years of recessions. The year before the actual recession was the worst year. So if they define 2023 as a recession, that would mean 2022, the worst year, the painful year. That would make it for me. I mean, if we're really just dissecting this and putting it simply, like that would make it for me, that would define it as 2023 is the year of opportunity. It's the year of the pivot. It's the year of turning things around. And I think everything that's happened with FTX and Celsius and all of these things, Luna, it's in the short term so messy and terrible. And, I realize why it adds so much fear into the markets, but I think crypto's going to get through it. The crypto's not dead in my view. And in fact, I think crypto is going to survive this and come out even stronger on the other side. So if you agree with that, hit the like button, because I've been seeing a lot of fear out there. Many people are just saying kind of maybe crypto's in deep, deep trouble. Bitcoin's going way, way lower. I was hearing yesterday on a Twitter space below 5,000. And it's just like, I don't see it. I really don't see it. As all of these things collide, I don't see that happening. I don't see crypto being over. So Fernando, thanks for coming by. I appreciate you, Fernando. Dan, it won't be the worst of it. Recession, high inflation, and high interest rates is world crypto never lived through. Liquidity is very flat at the moment. It's a great point. Listen, I want to address that. You're right. This is a world that crypto has never lived through. And much of the crypto market knows that. But what I want to say is this. I want to echo two things. Number one is literally what I just said. Over 69 years of recession data. It's the year before the recession. That's the worst year. For us, that would be 2022 being the worst year. The other thing is this. The market is not the economy. So what markets do, even if the recession is defined in 2023, what the markets do then will not exactly reflect negativity in the economy. So, and that's why I think smart investors are probably already getting in. That's what I think. And if they're not in yet, they're itching, I think, in the earlier stage of 2023 because of what that data says. Now, on top of that, the second point is this, because I know you say, things are going to get worse. Crypto's never lived through this. And I mentioned this earlier in this live stream. If that were the case, over the coming months, things do get worse and S&P 500 falls, right? Let's assume even that S&P 500 falls 20%. We've already established on this Bitcoin chart that Bitcoin, from where it is right now, could fall, especially now that it's testing the 786 line again, Bitcoin could fall 35% to $11,000 to $12,000. So you could be right. Things do get worse. And over the next months, couple months, few months, weeks, things get worse. You're right. If that happens, what makes me so optimistic is the opportunity that lies within this area for me. And the other thing that makes me optimistic, if you zoom out on this daily chart, that move, if Bitcoin were to go to $11,000 to $12,000 and things got worse, as you say, that move would be almost an identical move, or the average of the last two bear markets, that move. So it would be extremely ordinary and common for Bitcoin to make that move. So I definitely get your concern and I get what you're saying, but I just think it's, whether it happens or not, it's not a bad thing. Thank you for breaking it down Barney style for us. I appreciate you. A lower low definitely coming, which you discussed. Hit that one, everybody. Comment one if you think a lower low is coming. Here we go, guns and loaded. 12 to 15K in January. Don't let fear, Dan T says, stop you from getting into the best opportunity of your financial life. I love it. Jorge, appreciate you coming by. I appreciate everybody coming by, especially if you were here in that first one. Definitely some technical difficulties, everybody. But I'm going to end it there. I wanted this to be kind of a quick stream, just kind of going over where we are and the resistance. It's amazing to see this resistance on the 6-hour chart at this macro resistance. It's too cool to watch. I'm very curious to see how it plays out. If anything crazy happens, obviously I will be doing another video. But hit that like button for me on the way out. I know I probably sound like I'm begging, but it just helps algorithms, everybody, as I try and grow this thing in what is a very chilly bear market. And subscribe if you're not a subscriber. Either way, everybody, I hope you have an amazing day. I'll see you in the next video. God bless.